So today I revisited my discounted cash flow valuation model for Alphabet, and I wanted to share with you the updated intrinsic value per share, which increased to $255 per share. That's what I believe is a fair value for Alphabet stock, given its current prospects and longer term trajectory. The current market price is $244. Now, I like to apply a margin of safety in my calculations, so a difference of only $11 on a $244 stock, I say is fairly valued. I don't say it's undervalued unless the difference is larger than 10%, especially on a tech stock like Alphabet, especially with the current risks in the market. So the factors I updated for Alphabet in this current update for my intrinsic value were the risk-free rate. The interest rates in the United States have fallen considerably in previous weeks. Today they're up a little bit. We got positive GDP numbers, which usually indicate a stronger economy, and a stronger economy usually causes interest rates to increase because that makes it less likely that the central bank will be cutting interest rates, and that is what has been going on with interest rate policy over previous few weeks. It's been a major discussion in the United States, especially as the president is trying to influence the central bank to lower interest rates as low as possible. So my intrinsic value per share calculation has the stock looking fairly valued, but I still really like the stock. Now, I've talked a lot about how just because a stock is fairly valued doesn't mean it can't still be one of the best stocks to buy. Now, one of the things I really liked about Alphabet is the return on invested capital. In recent years, they've generated a return on invested capital of around 30%, and it's now trading at a forward PE of 24.5, which I still think is undervalued for a stock of this kind of performance, but it's less attractive than it was, of course, in April. But the business is also in better position. It put behind it this litigation and the court cases with the antitrust and monopoly concerns. If nothing else, it was a distraction to the management team and the company's employees. And so at least that distraction is removed, and the company can focus more completely on the challenges ahead and the opportunities ahead with artificial intelligence. Overall, I still like Alphabet stock, even though the price is higher. I still think it's one of the best stocks you can buy now in the market.
Click the link below to watch the full video.